So, first of all, thank you for staying and waiting for this last moment to hear what our guests, special guests from abroad have to say. We're speaking today in this panel about digital transformation in banking. It comes with a lot of ups and downs and challenges in the last years because clients are waiting for more, bankers want to push more digitalization, and I hope we will have some nice insights during this panel. Before getting and diving into each of you, I have a general question for all of you. In your view, what's that thing that drives the digital transformation in banking? We have different views. It's customer expectations, it's reducing of costs on the side of banks and other financial institutions. What do you think is that force that's driving actually the digital transformation? Please.
Hello, thank you for having me here and for staying so long. That's a very good question. And I would say it's what you mentioned and more. So for me, in my view, it is customers, first of all, it is cost, but also it's competition. And let me start with customers. Customers, they demand digital banking. They demand to do banking faster, and they wanted to do it from everywhere, like a lifestyle app. We go to our mobile and we want to shop something, buy something. We want to do the same with banking. We are all customers of a bank. Just think about yourself. You are in a bus, in the train, you get bored, you shop something, or you remember you have to do a payment. So customers drive digital banking. It's what we call now Internet of Things, like an embedded application. We have an application that we could do banking, shopping, social media, all together. It's an integration between the financial services and our smartphone. We are away from the web banking now. We don't need to have a laptop or computer. We can do everything from our mobile. And this is an evolution, and it's something that the customers demand. And if we talk about some numbers, without boring you, 88% of customers, they want to do online banking and not go to the branches. 70% of that is through mobile. Web banking is only 30%. And through a survey, customers, 50%, half of the customers, they said they will not go to a bank that doesn't have digital banking. So remember that. But also remember, and this is a controversy, 85% of the customers in a European survey, they said they will not get a mortgage from a bank that it is only digital and doesn't have branches. Because mortgage is important. It's the most expensive thing we buy, a house. So it's a different mentality for the customers. They need to have the trust for the bank. So having branches and seeing the logo of the bank builds trust and confidence to the customer. So we have controversies in the market. And here is a funny fact and a thing. 1/3 of the customers, that's 30%, they say they prefer to go to the dentist than go to their bank. Keep that in your mind. Prefer to go to fix your tooth with all the pain than going inside the bank. If we go to millennials, this percentage goes up to 70%. More than 2/3, they prefer to go to the dentist than go to their bank. So keep these numbers in mind. Then we have cost. Yes, we in banks or as software vendors, we want to reduce cost. We want to reduce cost not only to increase our profits, but also to offer our services to the customers at a lower cost. There is a big competition among banks about fees, charges, interest rates, so cost is a big factor. And it's a shift about what people want, what customers want. Everywhere, not only in banking, we people, we want to do our jobs and we want to do everything in our daily lives at a lower cost. And finally, it's competition. Traditional banks, they face competition from neobanks. You saw before my colleague Bernd discussing about the first neo-digital bank we launched in Greece, but also from non-banking institutions. We see a lot of players entering the market, players like telecom companies, retailers, players like Viber and Messenger and WhatsApp, and they're entering the financial market with e-wallets, with payments. So there is fierce competition in the market, and the competition is digital. We have to keep that in mind. So for me, all of this together, they drive the next day of digital banking. Thank you.
Thank you.
Yes, it is good theory. But yes, we see digitalization of banking from another angle. Who will drive digitalization? Customers? Maybe, partially. But why banks need to invest to this? To best customer experience, etc., etc.
Why to spend money, basically?
To spend money, no. And from another angle, if we see that regulations and mandates from card schemas from government drives this innovation, drives this digitalization of banking. Because, for example, if I'm like a bank, I want to implement Apple Pay, I need to spend a lot of money. And if card organization do not require this and not create some mandates, updates, bank, okay, it is good without Apple Pay. Because people to pay based on cards, simple cards, by Max Stripe, without chip. Because people usually want to buy something. Of course, if bank innovative and provide very good tools to buying, to purchase, of course this is nice for me. But who will drive this digitalization? From my perspective, mostly it is regulation and mandates. And only after customers.
Because basically not all the customers are power users, for instance. Not everybody needs advanced and sophisticated solutions. Yeah, that's what you're saying.
And also very important, if we want to see more people who will work in country, who will live in country, we need to somewhere stay and see what people to use. And most people use simple phones. Most people, not only Moldova, in Germany, in France, simple phones, without NFC, without anything. It is a very big percentage. And and who is drive? Only mandates.
Thank you.
Okay.
Ilia.
Okay.
Augustin.
So it's actually widely known, and everybody's talking about that neobanks is a threat from the banks. There's a competition, etc. Once I asked myself why neobanks are a threat for the banks, and I believe in the core, what is around discussed, neobanks provide a better user experience. This is why they are a threat. That's completely not true. The banks are slowly, it's literally slowly, and the three major businesses they're running, I'm not from the banking sector, I might be wrong, but like deposits, any lending, any type of lending, card issuing, card processing. This is a major businesses the banks are running. What actually neobanks are doing, it's actually what the most business already done, they're going to the customer. It's still like innovative for many countries when there's a bank without branches, it's still innovative when the bank is within your pocket. But, excuse me, almost all the services I'm purchasing day by day are more and more closer coming to me. I got all the deliveries. I don't have to go to somewhere to purchase some kind of goods and services. Banks only start doing this. They are already outdated with these actions for years. And this is the competition there. It's not the competition of neobanks. It's the competition of services. And this might be driving the banks because we can see a lot of banks who expose their services to a broader scope. Some banking interfaces, you can purchase airplane tickets. Precisely, it's not the bank do this, they're partnering, but still now they want to bring the services to compensate to the customer. Because, well, deposits are not anymore so interesting to the end user nowadays. The percentage rate, interest rate is so low. Lending, there's a lot of different lending already available. It's not only banks doing this. Card issuing, processing as well. There's electronic money institutions, there are account-to-account payments. Maybe in 10 years a card will not be any more need, etc. It's big IT companies like Apple is moving into the direction as well. So there's some kind of value the bank should start to bring to the clients as for now, because the value they brought 50 years ago, 30 years ago, is now decreasing and the value is becoming slower. This, what I believe, is driving, but who is driving in the bank? It's customly, bank by bank.
If you allow me a short commentary here, I remember those days when Revolut launched as one of the most important fintechs nowadays, launched here in the Eastern Europe. Basically, they had the user experience and they had some small additional services what the traditional banks did not have. I remember my experience. I switched the other day to Revolut. I did not transfer all the money there because I was not sure. I did not trust something which is virtually, as our colleague said. And in just 2 years, I figured out that I'm not using Revolut anymore. And I asked myself, why? Because the banks gave me already the same solutions that Revolut did 2 years ago. So banks were, well, not really fast, but really robust in implementing very fast and offering those virtual cards and additional services that you had on Revolut. So basically the neobanks were those that were pushing the banks and traditional financial institutions to innovate and be more flexible. That's my personal experience I had with it.
Sure, but that's completely complies what I said. You installed Revolut. Why? It was available. There was no need to grab the car or public transport to travel to a branch. As for now, in case there's an opportunity to set up a banking account without doing anything besides taking my smartphone, it's a better way to go. Why should I travel? Imagine from the customer user journey. In order to open a bank account, I have to put my clothes on, get out from my house, jump to my car, drive through the city and all the traffic, find a parking place, which is super annoying, I hate it. Most likely park somewhere like a very bad guy and get a receipt from the police. Sometimes when you, God bless them, they have this electronic queues. Okay, at least I can predict how much time it will take. Still, doing all this stuff and these little dollars, hello, my passport, I went so many times through KYCs. Can the bank finally exchange my data across the hour? When I went KYC in one bank, why cannot be just transferred to another with my consent? Still not there. And then all the way back home or to the work, still with the car. And they are opened only on some business hours. All of present people are doing some jobs, they're working that period of time. So in case there's an option, use a traditional bank with all this weird journey, or use kind of bank where can be in the pocket. It might be neobank, it might be a kind of traditional bank who got innovated. The customer gonna select it. Of course, the Revolut use case gave a huge push to the traditional banks, especially in Romania, doing this. And finally, they started that more and more in value. But some of the banks and bigger banks, like for example, Banca Transylvania, there are 3 or 4 apps on the markets on the App Store and Google Play. It's not very clear, even for technical people, which of them to be used. Depends on the services you're purchasing. We have experience because we integrate with the open banking channel. It's a disaster. And other banks like ING, great, super cool, nice. No idea to switch to Revolut, as an example.
Thank you. Ilia, yeah?
So I think that this question is on the back of the minds of everybody in banking and fintech, because it's a core let's say problem that we have. From my perspective, first of all, I think the colleagues already touched on some of we have the same views, but from my perspective, I think digital transformation is being driven by customer expectations, to be honest, and by competitive differentiation on the market. So right now, the fintechs are pushing banks to digitalize and to offer better and better services, because already the customers are used to using very digital channels to get onboarded, to open accounts, to issue cards, and so on. So I think the users and the customers are a main driver. And when a user and the customer is taught or is used to have a service or a product in a certain way that is fast, reliable, easy to use, and so on, this drives digital transformation. Banks and fintechs alike all are pushing toward this. Fintechs, because they needed to find a niche and they needed to find how to attract customers. Banks usually react slowly because of the size, because of the regulation, because of the organization, and so on. But slowly, what I saw in the market, not only in Moldova, not only in Romania, but all across Europe, and not only in Europe, my conclusion, my personal conclusion is this: customers are pushing for digitalization, and banks and everybody must rally behind that to offer the best service possible. If that is a digital service, that's the way we need to go.
Thank you. You wanted to add something?
Yes.
Vadims?
Yes,
Please.
I want to add and ask one question. We right now all here discuss about digitalization of front of bank, between bank and customer.
We want to talk about the back.
Fintech, bank, financial institution, etc. But what is digitalization for traditional bank? Digitalization, it is provides some nice, super fast service for end customers, partners, fintechs, etc. Or create in back of bank automatization, digitalization of legacy systems. Where is, because if I have like a traditional bank, some super legacy systems, and I digitalize only front of this. Yes, it is nice, very cool, etc. But I have a lot of cost to support this because I have legacy, I have something new, I have happy customers, but run this, it is nightmare for me.
And switching to new technologies for a neobank will, first of all, they don't have legacy, most likely.
Yes,
and
yes,
for a
exactly.
traditional bank to switch, yes, to a new technology to change the core banking. It's, we're talking about, in direct expenses, we're talking about millions, but a neobank is open to set up from scratch.
Yes, exactly. Why largest bank to see opportunities and invest to fintech? Invest to fintech and try to new business, new look and feel for customers, because this super popular legacy banks cannot very fast do this digitalization. Basically,
We're diving into the next question, so let me address the next question, and then you can elaborate more. When we talk about these transformative strategies, I am working in a fintech, and the one thing that's killing me and us, and it's annoying, it's meeting the regulatory demands. A lot of hard work, a lot of money, a lot of paperwork, and so on. So if you were to prioritize what is the most important in the digital transformation strategy, is it that thing to be fast, to be the first in the market, to meet the regulatory demands, like have a very robust legal framework where you're activating, or just bring that wow effect to the clients and you would get more onboarded clients, more traction, more money? We will start from the other side, please.
So this question has two faces, let's say. It's the optimistic and the dreamer state, where I would say the priority would be customers, to have a customer-centric approach, but in the same time, I need to come back to earth and say that it's a very tough question to answer. Because, again, banks, regulatory-wise, if you're not complying with regulatory, then your business will not be viable in the future. So it should be a mix. For me, I couldn't say that a priority is this or that. We need to look at the whole picture and see exactly how and what is the main driver and the most hanging fruit on the table or in the tree, where we could latch on and see how we can drive this digitalization. Yes, a customer-centric approach, it's beneficial. Regulatory is mandatory, so there's no negotiation at that point. Technology, even if it's meaning investing in new technologies, is also a top priority when you're driving digital innovation. So I think each and every player in the market should assess their position, and based on that, they should find and pick their top priority. It all depends. If you're looking at a small bank with rather new legacy system, if you're looking at a very traditional brick and mortar bank, so unfortunately, I cannot give a generic answer to pinpoint what is the top priority. And I think that's the most honest answer I could give at this moment. I think it needs to be addressed at a company level, or at a bank level, or a fintech level, or even at a market level.
Thank you. Augustin? Ilia?
Vice versa, yeah.
Sorry.
It's a tricky question you're asking. If you want to be a car, you have to have an engine. If you want to be a bank, you have to be regulated. There's no other way. Unfortunately, the question is that what you raised up, that the regulation starts to be stricter and stricter, more and more rules. And I believe there are a couple of them that have never been reviewed there. So you cannot play a successful game if you make it year by year more complicated and more challenging. Why this happens, so as we discussed previously, the banks need to digitalize, they need to come to the customer, they need to provide the better services. But this job's supposed to be done in the first row by the regulation. And we have some good examples. We have some good examples with this Open Banking Europe initiative in 2019, when there's no API, like some of the banks did it, not very popular. Then the regulation gave a push. There was so many mistakes done with that, in my opinion. But a good thing, they gave a push. Now we see a trend that more and more banks looking to direction to provide new digital channels of their services via the API. Let's look at the Deutsche Bank in Germany. Initially had only the open banking API set. Now they have 59 different kind of APIs. So in case I would want to open up a kind of neobank in Germany, I will not go to the regulator. I will go to Deutsche Bank. I will not purchase any core banking, identity service and stuff. I will just sign with them an agreement, go through all this security assessment and stuff. And my job will be just to build the app. Everything behind it will be baked up by Deutsche Bank. This is where direction they're moving. Would it be there without this open banking regulation and prompting the bank to open up the APIs? I'm not sure. But in that case, the regulation done a good job. But there's another example I know. I have some friends from UK who have a startup for a BFM app. And just to provide this example and give some thoughts. And literally, their the chief operational officer said, well, we put some money into the budget for the next year for the potential fees we're going to pay to the FCA, the National Common Authority of UK. Like, well, for us, it will cost $500,000 to implement. The fine will be around 50 to 70K. It's okay, better to pay the fine and promise them we're going to solve this within the next 12 months.
Nice approach.
Yes, agree, absolutely. Because it depends on your strategy. If it is long-term playing with your game, what you want, of course, regulation or partnership. If you want to not short some term games, you can somewhere mix.
What does mean short? Like,
Short,
I'm launching a neobank, like a fintech.
Let's try to make money very fast. And we'll see. If it is flat, we will be regulated. If not, we close this business, yeah? Something like that. But anyway, regulations needed somewhere in this step of your journey where you start your business.
Okay, thank you.
I like the answers. I'm somewhere in between, but for me it's quite clear. If you ask me personally, I would say number one is regulation, number two is the customer, and then it's speed. And I will explain why. In order to have customers to serve, and at the speed, you need to be operational, you need to be in business. And I have a friend, and he's a CEO of a small European bank, I won't tell the name, and he was telling me that it is important to, to be fast. It is important to have your customers satisfied. It is important to make money. But what is more important is to be in business. So he said, for me as a CEO, my number one priority is I want to remain on business. So I want to be okay with the regulations. And we have seen... Compliant. And we have seen banks, I don't want to mention names, in Germany and in Scandinavia, that they had huge fines. Some of the CEOs went to jail, and a bank in Germany actually closed because of regulatory. So it is, if it's a fine of 50K or 70K, like my colleague said, yeah, fine. I'm paying the fine and I'm okay. But if it's 2, 3, 5, 10 million, if I go to jail, if they close my operation, so for me, regulatory is number one. And because regulations, as it was mentioned, they become really stricter. Not every year, every month. It is really hard to keep up. So it is important to make sure that you stay in business in order to have customers and serve them at a speed, but make sure you stay in business. That's for me, it's the most important.
I don't like your answer, but I agree with you that regulation is important. We felt that on our skin. Mr. Theofanis, a question for you. Related to the personalizing the banking experience for clients. How much should banks focus on tailoring services to clients' expectations, needs? It's must-have or nice to have?
Thank you for that. It's a good question because we had also a couple of weeks ago a webinar again organized by FinTech Moldova. It was exactly the same subject and was very interesting, and we got insights. For me, it's very important. We have seen through surveys and statistics, about 70% of the customers, they not expect, they demand personalized experience. So this is very important.
70%.
70%, 69 to be exact, but let's say 70%.
That's a big figure.
And in the same survey, they asked the same customers, that was a worldwide survey, it was not only for Europe. They asked them to rate criteria for serving the customers' digital banking. And 3 out of 4 customers, that's 75%, they said that number one is personalization. That was the most important. They said speed, they said security, of course, everything, but number one was personalization. And it was mentioned in some previous discussions and panels and presentations. Customers do not like chatbots. They don't like a robot replying to them.
I confirm. I confirm.
Saying your call is important, your message is important, please hold the line. We're humans, we want human interaction. So personalization having someone cater to our needs, to what we want from the bank, is very important. So service and personalization are top priorities. And we have to remember, we are human beings, we are not robots. So, okay, we have logic, but we act on emotions. We're emotional beings. And personalization, even on a mobile, creates emotions. And emotions create loyalty. And what we want at the end, we want our customers to stay with our bank and not go to 25 different mobile apps, neobanks, different banks, that yes, they offer the same service. But is it personalized? Does it create something inside me that I want to stay with bank A, not bank B? I believe emotions are there to help create the loyalty.
Okay, and my second question is also to you. You've worked on both sides for banks and for technology providers. For sure, we have bankers here that are wondering how we should tackle this topic. What kind of services should we choose when we want to transform and be more digital? And which technologies should we invest in?
That's a good question, and yes, for the people you know me, for the people who don't know me, I've been in the industry for 25 years. 15 years I worked in different banks in Greece, and the other 10 in different software vendors in Greece, Asia, and in Europe. So I have a bit of an experience. For me, what is very important, I have seen it in many projects that I have been involved, core replacement, digitalization, whatever that was, both as working for a bank, but also trying to implement to a bank. We need to make sure, banks need to make sure that the technology works. This is very important. We hear buzzwords all day. A couple of years ago, it was web banking. Then it was mobile banking. Then it was customization of the app. Now it's AI. We can hear loads of buzzwords. And yes, some of them work. I would say all of them work, but we need to make sure which one works to the specific bank. And the banks, they should ask themselves, do I really need that? Do my customers need that? For me, the best strategy for the bank is to say, okay, I have a vision. I want to be there in 5 years, in 3 years. So what do I want as a bank? And what my customers want? And then try and find the technology. Don't let the technology drive your bank. You decide what you want as a bank, you decide what you want for your customers, and then you choose the appropriate technology. If I'm not mistaken, it was the late Steve Jobs that said, I don't want the technical people to come and say, oh, I created this, sell it. No, I want to say I want to sell this device, and you technical people, you have to find a way to make it. This is what the banks they need to do. Not drive by technology, but go and drive technology. Say, we would like to achieve this. We would like to serve our customers in that way. Now we need to find the right technology to do it. And this is important to selecting the right software vendor, not to sell you the technology, to be the partner with you. You create it along with the software vendor. You discuss and you say, I want to do this. Can you help me? Yes, you can. Okay, we go together. You cannot. We cannot go together. Don't rely just on buzzwords. For example, AI, yes, it's great, but sometimes it costs millions just to have the infrastructure. I have friends in a company, they sell AI. If you see the demo, it's fantastic. In 6 years, they have sold 0. Why? The infrastructure to support what they're selling, it costs something like 4 or 5 million. So sometimes technology for the sake of technology is no use. Make a decision that helps your bank go to the future, achieve your vision, and serve your customers. And there is the right technology out there to do it. That's my view.
Thank you. Vadims, Lamovs, I have an insight for you. Half of Moldovan citizens have double citizenship. I know if I want to open a bank account now as a Moldovan citizen, I can do it. If I want to do it as a Romanian citizen, I can do it. I have double citizenship.
I'm sorry, why half only?
Okay, we're entering in
Why only two? My second question.
We're entering in historical issues. We'll leave that to the coffee and after conference talks. You've worked in different international projects. The cross-border transfers are a tricky area.
No, tricky. It is very interesting area.
It's interesting. The demand, I believe, is higher and higher from what I've seen. So from your perspective, what are the key challenges in this space? What are the shifts you foresee in the near future?
Regarding cross-border, it is very complex question, and I do not have a right answer to this, because it depends on country, depends on mindsets, and depends on strategy. For example, regarding cross-border in Asia, it is already have and already move forward. Cross-border partnership between central banks, it is good, yes, but create this, it is very hard. And for example, in Europe, I don't know what is happening in Europe, cross-border payments, not in Eurozone, in Europe whole, yeah? But these movements we see around the world, very popular. It is Asia and Africa. It is very popular. It is not these banks and large retails in Africa not only thinking about this, but doing and implement this. And yes, and this is success story of some countries of cross-border payments. Again, cross-border, it is account-to-account payments. Under this, it is regulation, some kind of regulation. If you talk about Africa, some kind of regulations needed. Yeah. If you talk about Asia, this is a very strong regulation inside. Yeah, but I am repeating your wording about emotions. Yes, this is provide for these people emotions, because if I am to travel between countries and I have only one application from only one my favorite banks, I can pay everywhere, in taxi, in shop, in e-commerce, buy tickets. No, depends on country. Yeah, this is good.
Still, like when we rely on SWIFT, I can call my friend in Brazil and have a video conference with him. But if I would like to send him money via SWIFT, it's literally faster, not cheaper, but faster for me to get the cash, get a plane, and in 20 hours I will deliver the cash. Still, like, and we are talking about digitalization, and what is the difference between a money transfer in 2024 versus a message? It's more secure? Yes, it's secure. Does the security cost us additional 3 to 5 days? Precisely more, not. Like, why is it takes so much time? And that's why, like, cryptocurrency, a way to go. Like, I don't care about SWIFT, I don't care about money remittances, I use cryptocurrency. It's not the crypto and the security behind it, it's actually the speed. What I believe is demanded by the customer. Of course, there are a specific group of people who consume it for other things which we don't like, but actually that's fast, that's nice, and still it's secure. With the bank, traditional, not the more modern money remittance services, but traditional banking is still slowly. For companies, is SWIFT all the time long there when we talk about cross borders. And there are not many options as for retail. Really, the options are quite limited.
Yeah, exactly. And for example, one use case from Spain, this is BBVA Bank, yes, who have also cross-border transfers between Mexico and Spain in BBVA group. And yes, for merchants, for persons, for companies, etc. And this is also a great case. Yes, local, closed loop, but success story.
A short commentary here. The other day, we started to perfect a visa for Dubai for one of our colleagues, and you have to pay for the visa. They told us the amount, and we asked, how can we do it? And he said, it's like 80 euro, this is like where you have to transfer, but don't transfer it on Revolut and a few other options. I said, why? It comes in 6 days. And I couldn't imagine that nowadays there are such situations. From Moldova to Dubai, it takes like 6 days in some environments to transfer money. So we're still having some huge bottlenecks for sending money.
Is it possible to travel with a camel from Moldova to Dubai within the 6 days?
Probably,
And
yes.
so, and one question. So you know Neobank N24 or N26, yes? You know this, yes? And question is, we in Europe Bank, we have SEPA, schema. Why, if I send money to this Neobank via payment, SEPA payment, this money is received to my wallet only after 5 days? Why? It is Neo approach?
I'm not from N26, unfortunately.
Only thinking, why? It is Neobank. It's very popular in Germany. Why is do this? And I am writing this. Maybe you have some roadmap to connect to instant payment schema, SEPA Inst. And I receive an answer, no. Why?
Well, in the end, the clients will just run from those institutions and will choose for much faster and convenient solutions.
But maybe it is regulation. Maybe this Neobank do not have AML.
Maybe. Going to the next question, the last one for Vadims. Talking about this new era of instant payments, open banking, what do you think will be the next good-to-have skills for banking professionals to embrace?
Wow.
Because we are having here people working in banks and financial institutions, so like a sneak peek from your experience, what's the next thing they should understand and learn when providing such type of solutions?
The next thing, most probably, it is create application of bank products. It is colleagues also present this regarding application of product. I do not remember, but Saltage, yes, maybe, yes, present this. I am present this, and a lot of others talk about this application of product. Yes, it is some kind of digitalization, but why it is very important? It is to achieve very fast integration between parties. This is the next step, most probably.
Maybe.
Not. It is reality. It is reality, for example, if we talk about Europe, where PSD2, it is 7 years, maybe, yes, 7 years. PSD2 is online and work. Right now, banks start to thinking about this in many largest banks, like Deutsche Bank, like Nordea, like ING, agree such strategy and sell bank product via APIs. And these large banks do not invest a lot of money with front end, with design, and all based on APIs.
Okay.
Can I add something?
Yeah.
I was involved in the discussion where a big bank from UK, I'm not sure I can tell the name, they built a very significant API, like super nice and mostly oriented for corporates. And we've been on the call, they say, we have a problem. We invested several millions to build up the API. We built up an IT team. We investigated the market. We have the technology, everything. This is our developer portal. We provide you access. We are viewing this. I said, okay, what's the problem? Well, we expected that ERP system going to consume it and integrate. So, okay, and what's... Well, the ERP system have their own solutions, like a marketplace and all the stuff. They expect us to integrate with them. So now we're sitting there, two group of people, and the ERP system we've been talking about is NetSuite, who are big ones, and they can communicate in that way with bigger banks. And that was the situation. Like, still, as I said before, the banks is still expecting, in most of the cases, that somebody gonna come to them. We are not in Middle Ages. A bank is not just a secure building where I can put all my silver and gold in order not to drag it with me as a kilograms. We are far away from that moment. And okay, later on they invented the banknotes so that I don't have to have these metal things with me. Come on, you have to come to the customer. You have to get your solutions to the customer yourself. We are already out of times when customers have been running for solutions. Now the customer expects that multiple parties come to them with their solutions and they can select. This is what especially the delivery services brought in our world. Maybe they did a weird job because now the customer is some kind of annoying person who says, oh, I'm going to select here, not you going to select. But still, like, that's the competition. And with that example, with this big bank in UK, with the example of corporates, and corporates always brought a huge value to banks, still they're expecting that. And the idea actually is that it's a corporate who using that bank and as well using that ERP system. It's the same corporate, they have the same customer. And they did not make an agreement to find a solution for their customer. They're still expecting someone going to come and resolve this.
Somebody from outside, yeah. Ilia, continuing to you, you're coming from a company that provides open banking solutions.
Yep.
By the way, we have collaborated with you 5 years ago. But
have you got a good experience with that?
We had a good experience, but the bad part is that Moldovan users were not understanding. It was tough for Moldovan users, like to connect through open banking, to connect to their web banking services, which they did not have. So we had to find some shortcuts. But getting to the question, the promises of open banking, I remember 5 years ago, were nice. Not everything goes very smooth, as we see it in Moldova. You have a bigger experience in other countries. Can you share what are the challenges you have with the banks, with the third parties in fully embracing open banking?
Okay, as experiences in the company and acting in that area, yeah, first of all, there is a huge mistake with the regulation. The regulation is one for everybody, completely agnostic to the size of the bank. That was a big mistake. In countries who adopted the regulation later on, some of them done it more smarter way and said, okay, in the first row, like the big tier 1 banks come with that. Then the next year come the next group of participants and stuff. Throughout that, there was a chance to faster adapt. Secondly, what I believe is a big problem, and that's a commonly, widely everywhere, the regulation is not thinking about the monetization of all the stuff for the bank. Precisely, it's not their job. But actually, they have not created any condition that banks initially would be interested in that. And it took a lot of time for bigger market players to understand the potential interest of value-added, what kind of value-added products they can build about that. But it took time, so we lost like at least 2 years for that, which was weird.
And now?
And the third thing is, that's not on, I'm not and the third thing, it's not possible. So the market was still, then came the regulation, and now there was discussion, came the regulation. Now, as an example, variable recurring payments, there's a 2 years noise on the market in Europe. ERP is gonna come, la la la. No progress, there's a couple of banks who integrate. You cannot provide a value service to the end user in case there are 2 or 3 banks on the market only providing this, with a total coverage of the population, let's say at 25 to 30%. So if you roll out the solution, you presume you can deliver this solution to any of your clients. Since you are running a customer acquisition cost, this customer is acquired, it uses your services, and you like want that the services is consumed by the customer. Why this happens is because now the market, to my understanding, is expecting that it's driven only by the regulation in most cases. Some of the banks, as we said, doing a great job, but still like, oh, will the regulation say to integrate the ERPs? We're going to do this because there's no financial interest for the bank. This is why they expect. As soon they will put some financial interest, or a player, existing market player will do it, as Visa announced last month. They said, okay, we've got the rules in this game, we're going to publish our own system. From the monetization point of view, it looks very similar with the cards schemes. But it's going to run on the APIs, no cards needed, account-to-account payments via Visa. And oh, this is how it goes now. So potentially I see like the regulation question will come to the second place from the open banking perspective, of course, only. And banks going to roll out more and more stuff and build like channels above the regulation, more reliable channels. Our national bank did a great job. They adapted a lot of things. For example, user experience and many other stuff. But still it's challenging. I would not say that this last 5 years journey was a great experience. As for today, retrospectively, there's a lot of things that might be running much better. We might be so far much ahead of the situation we are.
Thank you very much. Augustin, going to you, in such a highly regulated area as the banking sector, how can the financial institutions maintain a balance between innovation and providing security and stability?
So I think innovation and security don't need to be mutually exclusive. So they are not excluding one another, and that's the main, let's say, point I need to give from the start. The key, I think, it's having a mindset that it's security first, because without having security, innovation doesn't have any point. Yeah. So I can give you a personal example and how companies should deal from my perspective on this. And the only example I have in mind right now is in SIBS, where we have a security by design approach. So when we innovate, when we have new products, on the whole development process of the product or on the service, we put compliance, risk management within the development of that innovative service or product. So we build with that in mind, and we take that into consideration in all the process that we have laid before us. So I think this is how we deal with it. I don't know how others are, but I think this is the safest approach, security first mindset.
And my second question, nowadays, when we have a lot of digitization, do you think the bankers have to change their mindset? No? If yes, what should they change in this new era?
I think the bankers, and I'm not talking about anyone in particular or anybody in this room or in Moldova, I think that bankers should have a customer-centric mindset. I know that we rather like focusing on products and traditional financial products as bankers, as traditional bankers. But right now in this age, I think that data-driven decision-making is a must, and bankers should embrace this. We have so much data. We can gather so much data about the customers, about the market, about everything that's happening around us, that we can have data-driven and customer-centric approach. Of course, we need to align that with the regulation, we need to align that with the field that we're playing in, but I think this is a key to any traditional banker. And I also think that one of the example I can give you back 10, 15 years ago, if as a fintech you are going to a banking institution to pitch a proposal regarding a collaboration, regarding, I don't know, digital onboarding, video identification, and so on, the main focus of bankers were, okay, our main goal is loans, deposits, number of accounts. Why should I unbalance a very legacy system with something that it doesn't make sense at this point? So I think that we see that we have enough data to change that mindset. And I think that collaboration, we need to have a mindset of collaboration also. There are so many fintechs, there are so many technologies, there are so many things that there is no more traditional banking. We need to change the mindset and realize that we are chasing the same customers. We want to improve the society, we want to improve the financial system. So we need to place ourselves in a very tech-wise mindset. This is what I think that should be a change in the mindset of traditional bankers. Again, I'm not saying that this is not happening or this is not the case, but I think that's a step everybody needs to take.
Thank you very much. We're coming to the end of this panel, but not before my last question to all of you. If you could refer briefly to it. I've seen a couple of examples when banks follow some trends, try to implement the technology very fast and test it, and it failed. I've seen features like this. I've seen more tragic things when they developed an application and it was not the right technology and they had to remake it. So taking this into consideration, how do you think banks can innovate without falling into the trap of chasing every new technology? How can they make sure investing in technologies that truly add value rather than just jumping on trends? Fanis, please.
Well, that's a great question, and it has a lot to do with what I replied before about where a bank should focus on which technology and not jump on any trend that they hear in the market. And I have a son and he's 10 years old, and I tell him, and I tell you the same things to banks: do your homework. Go ask the experts, like my son asked the teachers, but then do your homework. So you will ask companies like Natech, you will ask some consultants, but then know what you want to do your homework and challenge them. If you go to a vendor and you say, I don't want to do, I want to innovate, they will sell you the whole catalog, 25 different products. Know what you want to do, have a discussion, but be honest and challenge the guys that are opposite you. And you will find the best solution. Don't jump on any trend or any buzzword. And check the competition. Yes, your competitor may be using XYZ technology. Is it worth it for you? Does it work for your competitor? Try to learn from their mistakes. You mentioned, and you are correct, we've seen a lot of failures. We've seen a bank, a digital bank in one of the big European countries. They're trying to launch it for the last 3-4 years. They spent hundreds of millions and still it is not live. We can learn, and you can learn, the banks, from the mistakes of other people, but also from the successes of other banks. And then steer you to the right way, but always have as a compass in your mind what you want to do. Yes, you want to innovate. Towards what? Have a compass, have a target, and then invest on the right technology, not on everything that's out there. That's my best advice.
I'm only add. You need also trust. Trust, it is success. If you trust with company, with who is work, buying some innovative technology, you can do everything. Yes, you can fail it. You can try again. You can fail it. You can try again and reach this success story. But trust, only trust. After you will go this way, what explain it, colleagues? Yes, then only trust.
Okay, thank you. Ilia?
Well, I have an answer, but the banks will not like it. If you don't want to land on the mistake of selecting the technology, just drive the technology. But that's not the mission of the banks precisely. What banks precisely can do, why switching from an hour web to like technology base is expensive in the bank? Because of really weird process internally. Because they're not agile. Because there's a chain of decision makers who are making nonsense and non-decisions. Make it shorter, transform the bank internally. This is where the innovation starts. The innovation doesn't start with big data, AI or machine learning. That's a result of innovation you might perform. Is it a bank or company? The innovation starts with implementing some kind of agile process where people are open-minded, when can take the responsibility and make the decisions. Then it moves faster. In case you have to run with a paper through the whole banking building, I have to sign on level 1, on level 2, on level 3, on level 4, unless I'm allowed to change some kind of technology in the app. Even my IT department insists on that for 2 years. Like, this is a no-go. We can talk about AI for 10 years up front, but nothing like that going to happen. So innovation should be, firstly, within people they're working, within people making decisions, and within the company structure. Then the tech stack behind it will not be a problem at all.
And yes, and very popular right now it is where banks start to thinking about something new, buying something new. It is, you do not need, okay, I will drop this old technology and go to the new technology. No, you can try with proof of concept. You can build something, one use case, business case, try this in parallel. And after that, you can test this vendor. It is vendor good, not good, innovative, or only in PowerPoint, innovative, in real time it is not innovative, yes, and etc. Yeah, you need to try, and right now banks experiment with this. Okay, you're a good company, you're a good vendor, but please show me what you have.
Yes, and the reason why it's like that, and what kind of things it produces in other areas is like our company participated in an RFP. The budget for the RFP was 5 times smaller than the price they paid to a big consulting company, international consulting company, to build up the RFP. To build up those 960 questions that we have to fill in, and the price for itself for the product was like 5 times smaller. How can you be fast if you spend 5 times more on documentation versus on the product? You cannot run an MVP. Like, and this RFP was in progress upon the date shared there, start-off date of for 2 years. So you were able to validate the idea, roll it out, maybe be successful, maybe validate another idea in the meanwhile, but you're still working on the documentation. This 1960 waterfall approach is not innovative.
Thank you. Augustin?
So the best advice I would have is don't be afraid to fail. Test, experiment, even if it doesn't need to be a huge investment in technology. You don't need to change your entire stack. You don't need to change your legacy system. You don't need to put all your coins in one bag. So you can test, have different partners, have different technologies, test them out, even start slowly in the beginning. You don't need to, critical system don't need to be upgraded on a whim, or just that you have money to spend, or because the new word is AI and everybody is talking about AI. Test it, fail if that is the case, and choose very wisely where and how we invest. The technology should follow the strategic vision of each bank or each company, where they see what is their goal for a 3, 7, 5 years goal. So if you know you have that goal, what would you need to achieve it? What is the laden track? And then see if there is a better possibility out there, a better technology. Test it. If it works out, it's best. If it doesn't, you learn from that mistake and you apply it to your next experiment.
I want to thank you all very much for this energetic, in-depth and valuable talk we have had. It was not just a monologue, but it was quite nice ideas and interesting insights from different perspectives. Thank you very much. I think we close this panel here and we give the mic to our moderator. Thank you very much.